Imagine a tier one bank, right? Trying to process a global multi-million-dollar payment in the time it takes you to blink.
Yeah, literally milliseconds.
Exactly, milliseconds. And then suddenly, a regulator knocks on the door, demanding to see the exact, algorithmic thought process behind that transaction in real time.
Which is, I mean, that's a total nightmare for the system.
Right. If the bank pauses to pull that data, the entire payment system just crashes. So, welcome to today's deep dive. We are looking at a highly confidential executive briefing from May 19th, 2026. It's all about agentic banking.
Yeah, and the mission here is to figure out how this massive regulatory crackdown on black box AI is forcing an overnight architectural shift in global finance.
So to kick us off, the catalyst here seems to be a complete rejection of how banks have been using AI up until now.
Exactly. I mean, historically, the industry relied really heavily on probabilistic models.
Right, where the AI evaluates massive data sets and makes a highly educated but, ultimately unverified guess.
Yeah. But regulators have essentially outlawed that now for high-stakes functions. Any autonomous agent making credit decisions or routing capital, it has to comply with these deterministic audit mandates.
So we're moving from an era where the AI could just say, well, trust me, I know the answer, to one where regulators are saying, no, you need to show your math on every single transaction.
Right, like a student getting caught just writing down the final answer on a test.
Yeah, exactly.
And crucially, that step-by-step logic trail has to be generated in real time, and it has to be entirely tamper-proof.
But wait, bridging that gap seems physically impossible on legacy systems? I mean, modern payment channels need end-to-end processing in under 15 milliseconds.
Oh, it's a huge problem.
Right. So if you force an older mainframe to inline log thousands of AI variables
And active model weights.
and prompt states, you're going to massively spike the CPU utilization. That MIPS exposure alone would trigger millions in infrastructure penalties.
Not to mention completely disrupting the real-time fraud orchestration loops.
Isn't this basically like trying to inspect every single part of a race car while it's going 200 miles per hour?
That is the perfect analogy. It is the core friction point here. The overhead just immediately crashes the transaction.
So if the mainframe crashes under the weight of real-time logging, the banks must have to entirely bypass the core payment stream to do this observation.
Right.
Are they building a parallel track just for the regulators?
Yeah. That is precisely the architectural pivot the briefing details. They call it an agentic AI governance layer.
Okay, an agentic AI governance layer.
Right. To solve that latency bottleneck, banks are decoupling the action from the observation. They're utilizing cloud-native event streaming platforms like Kafka and Flink.
Which means instead of processing data in static batches, these platforms process data as a continuous flowing stream.
Exactly.
But how does that actually capture the AI's logic without dragging down the main payment rail?
Well, they deploy what are called event sniffers.
Event sniff.
Yeah, they're these non-blocking parallel agents sitting right next to the primary payment rail. And because they operate asynchronously, they don't wait for the payment stream to start.
Oh, so they don't even ask for permission.
Right. At the exact millisecond a transaction occurs, these sniffers instantly siphon off the system pumps, model weights, and core ledger states.
Without the main system even noticing.
Exactly.
I get it. It's like having a silent court reporter perfectly transcribing a rapid-fire trial.
Yes.
The trial keeps moving at top speed. The lawyers never have to pause. But every single word is being officially recorded and time-stamped in the background.
And the final step of that background process is what satisfies the regulators.
Okay.
The event sniffers package all those siphon variables into a cryptographically signed metadata block.
Wow.
And then that block is attached directly to the core ledger, so the decision path is locked in, entirely immutable.
So the bank gets its real-time audit trail without touching that 15 millisecond processing speed. What does the operational payoff actually look like for a system running this dual-track architecture?
Well, the briefing refers to this target state as the 10x bank. Historically, preparing for a regulatory audit required 4 to 6 weeks of brutal manual data reconstruction.
That sounds awful.
Yeah, it was. But with this decoupled architecture, audit prep drops to under 5 seconds.
Wait, under 5 seconds? That's insane.
No, the MIPS mainframe strain drops below 25%, and total compliance latency stays comfortably under 12 milliseconds.
Meaning the system is practically invisible to you, the end user. Like when you swipe your card at a coffee shop or wire money, you expect instant approval.
Exactly. Nobody wants to wait.
Right. This invisible multi-cloud architecture ensures that your transaction clears in the blink of an eye while remaining completely legally bulletproof.
And, the financial sector is bleeding edge here strictly because of regulatory pressure, but this parallel governance technology is going to bleed into other sectors rapidly.
Which leaves you with this to really think about. If banks are already deploying parallel governance agents to silently observe and cryptographically record every single AI decision in milliseconds,
Yeah.
what happens when these constant event sniffers are mandated to monitor the AI systems managing your personal health data or running your smart home?
That's a crazy thought.
Right. Will your house have to silently show its math to a regulator before it even unlocks your front door?